Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And Treasury yields are hitting the highest level since 2007. If people are not new to this channel or new, they probably know I am very deep into TLT, but we've gotten some comments on a bunch of videos saying, is that the best way to take advantage of this? There's a ton of ETFs, so we're going to look at the most popular ones that people talked about in the comments. So trying to take advantage of, make some money.
Yeah, learn some.
Money. Two Stupid Guys Trade Stocks.
That's what the bond market looks like right now, actually, with that chart in the screen.
Yeah, that's true, actually. I forgot about that. So here are the ones, TLT, TLTW, TMF, ZROZ, GOVZ. Those are the ones that were mentioned the most, okay? So these are the ones I did my research on. I'm not trying to get too into the weeds because you could spend like a long time talking about each individual one. So I'm just trying to hit the
Yeah.
highlights. And I'm also going to show comparative performance up till now because that's really what matters. All right. I'm
Interesting.
going to
Okay.
show you. I'm going to show you why. Makes sense.
I like it.
If there are any other ones that people want, I can do another video. All right. These were just the most popular ones. So these are the ones we're comparing. Real quick, I don't want to get too in the weeds. This may be a long video, but convexity, as a very minimal general term, relates the interaction between a bond's price and its yield as it experiences changes in interest rates.
Okay.
Duration measures the bond's sensitivity to interest rate changes. Higher duration implies greater price volatility should the rates move. Okay?
Okay.
This is a fake graph. It's just showing how different yields can affect things. Let me minimize your camera.
Yeah.
All right. So the longer the 30-year, you can see as yields move up, it tanks. If you go in reverse, it also is the most sensitive. So the big thing is longer, most sensitive.
Because you have to compound that out over time, so it makes sense that the longer duration would be more affected by interest rate changes.
Exactly. This is the same as just with numbers. So if you have a 2-year bond and you move rates up 1%, you go from down 1%, down 7 to down 14. Once again, these are kind of fake numbers. It's just trying to show relative to how long the bonds are to how sensitive they are. Okay.
Okay.
Now this is the most in-depth we're going to get for convexity, but it is kind of important.
Yeah,
All
that's
right.
a lot of words in a small type font.
I know. Hear me out. All right. As the yield or a bond changes, so does its duration. A bond's convexity measures the sensitivity of a bond's duration to changes in yield. Duration is an imperfect way of measuring a bond's price change because it's not really linear, it's more sloped as stuff changes.
Mm-hmm.
A bond is said to have positive convexity if the duration rises as the yields decline. A bond with a positive convexity will have a larger price increase. That's a big part. Bond with a positive convexity will have a larger price increase due to a decline in yields than price declines due to an increase in yields. So for what we're trying to do, because we're trying to time essentially that yields will be decreasing, we want a large, high positive number convexity. Okay?
Okay.
Positive convexity can be thought of as working in the investor's favor since the price becomes less sensitive when yields rise. Does this make sense?
Positive convexity, less sensitive as yields rise. So will that drive you towards the shorter end of the like time expiration for bonds, or the longer end? That's kind of what I'm trying to think there.
I probably should have finished this sentence. Bonds can also have, bonds can, positive convexity can be thought of as working in the investor's favor since the price becomes less sensitive when yields rise than when yields decline. That part's important.
Okay.
Bonds can also have negative convexity. We don't want this for what we're doing, which is the exact opposite of what I said. So we're going to compare each one's convexity and also, I'm going to, spoiler alert, TLTW sex, which it thinks, you would think it'd be great. It's
Okay.
not good. That was like one of the most popular ones people were saying.
Yeah.
So TLT, you can see the effective duration is 16.1 years. The convexity is 3.55 with a weighted average maturity of 25.46 years. I'm going to circle back to TLT. We're We're going to take a quick look at some of the other ones. Now, obviously, TLTW should have almost the exact same thing because all TLTW is, let me move my,
Okay, so lower convexity.
slightly lower convexity, same duration. All TLTW is, oh man, trying to do this at the same time. Oh, that's why we do it live. So it can provide more income compared to traditional U.S. Treasury bonds by selling monthly covered calls. Okay?
Okay.
According to BlackRock, this fund should outperform in periods of rising rates. We're not
Okay.
really still in periods of rising rates. We may be. It may be a point, here, not a point, a rate increase here or so. It
Yeah.
may not be a whole thing. But essentially, what they do is they write 1 month, 102% out of the money covered calls. Okay? This strategy may outperform in periods of rising rates and widening credit spreads, but in periods of declining rates, the fund will likely underperform as
Okay.
compared to just regular stuff.
So interesting. So TLTW would be doing better during this portion of the kind of rate cycle, but would be worse once they finally start to like cut rates. Which, yeah, is probably quite a ways way off, particularly based upon this week's jobs data and Jerome Powell's speech. That's why the market was not so happy.
Yeah.
But so yeah, okay, that makes sense. That's an interesting thought. I like it. Plus, you've been doing
So,
covered calls on TLT on your own too, which is like
mhm.
almost effectively your TLTW.
Except there's a big difference here. So I'm going to focus on what you just said and what other people are probably thinking. TLTW should be beating TLT right now, or has been.
Should be. Yeah.
Yeah. Well, they have a little problem with their 102% thing. I'm going to show that.
Oh boy.
Yeah. So here is their holdings. It's essentially just TLT, and the reason why you can see it's 99% off to this. Can you see my arrow? Yeah, 99% off to this. You can see November 23rd, they have a covered call expiring 86. At 86 is their strike price. I
Okay.
think their problem is they're not realizing just because we have a decrease in rates, that doesn't mean that's the only time yields change, right? We kind of minimize the situation by saying, hey, rates go up, so TLT is going to go down, vice versa. But there's more than just those factors. I'm going to illustrate that because TLTW's performance is shit. Yeah. So this first yellow line here is July 26. So this is where we had a 25 rate bump. Okay? So you can see we went from about 100 to 92 during that time.
On TLT.
On TLT. This is TLT. Yeah, this is not TLTW. Okay? Now, September 20th, this yellow line, we did not have a rate increase. We just stayed the same. Okay? Other outside factors have decreased from 92 to 82, which
Okay.
is another like 13%. But there is no rate change. Okay? Now,
Yeah,
their
understood.
102% rule on covered calls is costing them a bunch of money. I'm going to show that. But first, TMF.
Yeah.
Okay?
So yeah, TMF, the triple levered ETF playing on this, but the problem is like it literally tells you right in their description that they use a series of futures and options in order to create this triple levered product. First of all, expense ratio is high, like over 1%, and it's only designed to be held for a day. Like this isn't this is not a buy and hold kind of instrument because it resets every day. So triple level products is not something I play with at all. You're just burning through cash in order to maintain that leverage, and your timing would have to be perfect. This is well above my pay grade.
Yeah. Literally on the site, there's no guarantee the funds will meet their stated investment objectives. They seek daily goals and should not be tracked for more than a day.
Yeah.
I, at one point, was thinking once rates start to change, I'll maybe do TMF, maybe. I'm just not going to touch it. It's just not worth it. There's too many other vehicles,
Yeah.
especially looking at the next two that we're going to talk about. This is completely dead to me. So, ZROZ, all right? So this is a bond ETF made up of strips, which are separate trading of registered interest and principal securities. These all have a maturity of at least 25 years. These are very, very long. Okay? Their duration, also 26 years. If people remember, TLT's maturity was like 23, I can't remember, but the duration was 16. So this is much longer. Because of that, it's also going to be much more sensitive to interest rate changes. The holding makes no coupon or interest rate payments throughout their tenure, but ZROZ and GOVZ, both of them, actually they do pay a dividend. So
Interesting.
yeah, I'm not gonna lie, I have no idea how that works.
Yeah, I don't know either. Because strips really should be a cleaner way of doing this trade because you don't have to include the coupon at that point.
Hmm.
This is just discounting a future value. So 25 years from now, if it's worth $100, you take a 5% compounded interest rate and figure out what the current price of that $100 25 years from now is, and that's the value. That's how strips are traded. It's a very clean way of doing it rather than having to include a coupon throughout the duration of that 25 years.
Full ignorance here. I'm not a CPA. This is me just risking my own money. I I don't understand how they have a dividend. Finney, can you double check that while I go to the next slide? But I've looked
Yeah,
at it like five
I'll look. I
times.
don't really know. That's not something I'm
I'm
familiar with.
confused. This is the top 10 exposures of ZROZ. So you can see, I more just did that. So you can see the expiration date of these puppies. They're all 2050, 2049. They are out there.
Interesting.
It has it, correct?
I mean, it wasn't listed on the Google results. I'm trying to see if it actually has listed on their premium discount,
Do GovZ, because I'm
tracking
gonna
error.
spoiler alert. They're the same frickin' thing.
Yeah.
So I was looking at these. I'm not familiar with ZROZ or GovZ. I'm sure I'm going to piss some people off here by saying GovZ and ZROZ are the exact same thing. They are, though, and I'm going to show you why. So, same thing, utilize the strips with a remaining maturity of at least 25 years. Really, the only difference is it's issued by BlackRock and not PIMCO. That's it. Vinny, check this out
What's
before
up?
you look. So I'm going to show you how these are the same. So real quick, this is GovZ. The duration's 26 years. It's the same thing. The convexity is much higher, 7.28
Yeah.
compared to TLT. Okay? Now for people who are saying, no, 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 these have slightly different nuances, I don't care. Because here's a graph of 3 years. Now, what you can't tell, these graphs are on top of each other. But they're literally so close together, you cannot tell a difference
Yeah.
in
Perfect
anything.
correlation.
Yeah, it's like
Okay.
look at this one year out, minus 23.77, minus 23.78. I don't care.
So the holdings themselves, if you look at that level, maybe that's why they're different. Like if you actually want to
Yeah,
download the actual spreadsheet of everything that they hold. So maybe on a line by line basis, if you do your own valuation, you might arrive at one being better than the other. But
there
they have
was
like
two
100%
minor
correlation.
differences. One, GovZ is much newer, is by BlackRock,
Okay.
and two, the expense ratio was slightly lower. That's
Okay.
it. But
I like lower expense ratios. I'm not gonna lie.
yeah, my problem is it does not have a long history, and I use that for my covered calls because I know it's not a stock and it shouldn't recognize support and resistant lines,
Yeah.
but for some reason it works. So I don't know.
Well, the other thing too with your covered calls is that you really need a decent amount of liquidity. I don't know if these have enough liquidity in order to do that because like you should
Mm,
never be trading an option as far as a covered call that has like a daily volume below 100 and like an open interest less than like 10,000. I want to say it's like good guidelines.
yeah, I believe GovZ does not have a lot of liquidity. I'll have to double check that. So TLT weekly. Okay, this is the interesting part of this. Now, what I did was I took from the top of COVID, from the highest price right before shit went down, and down to where we're at right now. And then the other one I looked at was October 24th. This is where we had kind of a lull. If you see my arrow, you can see we actually had a bounce back up. And all of these responded the same way, but we're going to compare percentages. Okay?
Okay.
All right. So from top of COVID to now, TLT's down 53.4%. From this little lull, which was about a year ago, 8.8%. Okay? Now, TLTW has not been around that long, but from the equivalent October date, down 16%. Okay? TMF, shit. I don't know. It's really bad. it's
Who knows?
Yeah, I don't know. It's terrifying. But down 93.34, ZROZ down 67.14, GOVZ, once again, it's newer, doesn't have a history, but 14.9. So these are the numbers side by side. Now, the surprising one for me was TLTW. And I think what's happening is because, as I showed in that earlier graph, there's so much fluctuation of TLT, even with no interest rate change, they're getting called on their covered calls that are then having to buy back in and then keep on getting called instead of just collecting the premium. Because had you just not done any covered calls, you would have 8% more money.
Interesting. Yeah. Trust me, I've run into that before. I did a stupid video
Yeah.
about my errors with covered calls. It can definitely burn your butt.
I was very surprised to find that out. So I will not be touching TLTW. I think it is superior to look at support and resistant lines on the graph itself and use that to determine where to do covered calls rather than just an arbitrary 102%.
Yeah.
I'm not putting a lot of weight into this. This is Money U.S. News rankings of long government bonds. You can see GOVZ, ZROZ, TLT at the top, TLTW's at the bottom. You have other separate bond lists like Forbes Advisor and Kiplinger. They all had TLT in the top 10 and none of the other mentioned ones. I don't really put a lot into this because it's just like analysts who say one stock is going to $1 million and it's going to be dead tomorrow.
Yeah, exactly.
So I have 450 shares of TLT right now, right? Yeah. I got a lot in.
Yeah. You put your money where your mouth is. So this one.
Fuck yeah, I am. Now, the interesting thing here is I'm sure there's nitpicking on what the best vehicle is, okay? I do not see a scenario where rates go down or whatever. TLT goes down and GOVZ and ZROZ shoot up in the next 5 years. It's just not really possible with the holdings that they have. I think that if you timed it perfectly, ZROZ and GOVZ would make you more money. But the problem is you got to time it perfectly. I'd rather make a decent amount of money than lose a ton of money. So ZROZ and GOVZ are a little bit rough because if you had bought in anytime in the last 6 months thinking that you're good to go, you're not having a good time right now. And TLD, you're down like 5%. So, and you could just do covered calls. The other thing with ZROZ and GOVZ, I have to look. One of them has a volume problem. But trying to do covered calls on those when you're that far out of the money, you get nothing. So it's pointless.
Because you had effectively been doing the wheel strategy on TLT to kind of lower your entry point, basically, is kind of the whole process here. And
I'm still buying. I'm trying to get to 500. I'm going to buy another 50.
Interesting.
Yeah, I was waiting until it hit 80. But
it's not far off. That's for sure. It's getting to that point where it's pretty crazy how it's setting new lows effectively. So it's a pretty wild time as far as bonds go. I might actually do the opposite. We talked about that video. I do have, I think, a 10,000 or so that's uninvested right now, and I was looking on Charles Schwab at buying an individual government bond.
Mm-hmm.
So
I was going to do that too. I was thinking about just selling a bunch of my stocks at this point, but this is just to show you again. This is that yellow line. There's so much variability even without the interest rate changes. You know, we lost 13% on TLT with no interest rate change. So the TLTW model, I just think is faulty. I don't think it works.
Okay, interesting. I mean, it's traded based upon an underlying asset, but it's not necessarily correlated 100%, right? It's as in like the stock market, it's loosely based upon the U.S. economy, but not necessarily linked.
I mean the 102% rule on covered calls, because they're using that rule. They clearly keep on getting called and then had to buy it back in, and it's caused them 8% equivalent in the thing that they're shadowing, which is TLT.
So. I mean, that's the danger of using options on something like that. Like, we've all both been burned by this before.
Yeah, 100%. Did you look up the dividend?
I'm not really sure how they pay it, though. It does say, indeed, they haven't listed as having a dividend. I'd have to do some more research on this and figure out
someone
how
answer that.
Manage that.
I don't understand how they have it. This is why YouTube's great. We don't know. Someone answer it.
I completely don't understand how they're paying a dividend if they have no coupon on these bonds that are included in this fund. So,
Yeah.
Let me know.
I don't
Love to
know.
learn.
All right, guys. Let us know what you think. Yeah, it's kind of a long video, but
Yep. Catch you next one.